Hey guys, it's Nick. In my last video, I talked about the Bill Ackman SPAC and what's been going on with that, how they're getting sued, how their deal fell through because the SEC didn't allow it. And so today there is news on what they are doing with the SPAC, and it might surprise you. So I'm going to go through that and I'm going to explain it as simply as I can using kind of pictures on what they are proposing for current shareholders of PSTH. So if you're curious on what you would get in this new Sparc deal, then check out this video. So just to recap, the Bill Ackman SPAC, PSTH, has been looking for a deal, and they agreed to buy 10% of Universal Music Group, but that deal was nixed by the SEC, and immediately after that, they got sued. Now, this suit was brought by two professors, one of whom was a commissioner for the SEC just in between 2018 and 2020. And their argument is that the SPAC, and not just Bill Ackman's SPAC, but they're going after Bill Ackman because it's the biggest SPAC, and so it will set a precedent for all SPACs, that the money that these SPACs take in while they're waiting to find a deal, they put this money in short-term treasuries and things like that, short-term investments that gain some interest, very little. But so they say that that is an investment fund, and therefore it's subject to the SEC rules on investment funds. So this is not just about Bill Ackman's SPAC. All the SPACs are doing this, and to me, it's kind of a non-issue. They're just parking the money in short-term treasuries, which are considered the risk-free rate. 90-day treasury bills are considered the risk-free rate. And so all these SPACs do that. Most companies do that when they're parking short-term money. They put it in 90-day treasuries or something similar. So the lawsuit itself isn't a huge thing. However, in the letter that he put out today, he mentioned that this thing can tie up the PSTH SPAC for a long time. And in the meantime, they only have 11 months left to find a deal or get a letter of intent, and then they have 6 months after that to close the deal. So time is running out, and in the meantime, if they're stuck up with this lawsuit that they have to fight in court, there's not going to be a lot of companies that are going to be interested in tying up a deal with the Bill Ackman SPAC while there's all this news of litigation and getting sued and all this stuff, all kinds of uncertainty. Now, I'm sure that's kind of what the people who brought this suit are hoping for, that they will get paid to go away and maybe win this suit and have some kind of precedent that will apply to other SPACs in the future and current SPACs as well. So Bill Ackman's solution to all of this is to get rid of the SPAC and go into a Sparc. So let's take a look at this letter and see what it means for current PSTH stockholders and the warrant holders and what they could potentially get if they hang on. So people in these Reddit threads are not too happy about Bill Ackman and how he talked about what the current SPAC is. So Bill Ackman is calling PSTH a leaky boat. We are sinking. And Bill Ackman said, if you find yourself in a leaky boat, oftentimes you are better off switching boats than patching leaks to complete the mission. And so some comments here, Bill is the only captain not going down with his ship while all the passengers drown, moving the needle for the little guy. Bill and his team took the only lifeboat, UMG, for themselves and left everyone else to go down with the ship. So that's kind of the sentiment about this. So here in this Barron's article today, they give the details of what he's proposing. So what's the difference between a SPAC and a Sparc? Well, a SPAC is a special purpose acquisition company, where a Sparc, made up by Bill Ackman, is a special purpose acquisition rights company. So the difference is, with a SPAC, investors put up their money ahead of time of any deal being done and wait until a deal is done and then approve it. With a Sparc, investors just hold a warrant to the right to get into the deal, but they don't have to put up any money until a deal is identified and they agree to the deal. Then they could put up their money. So under this new plan, Ackman will liquidate the $4 billion trust to shareholders at $20 a share. So everybody gets their $20 a share back, and they also receive one warrant tied to a new entity called Pershing Square Sparc Holdings, short for Special Purpose Acquisition Right Company, an Ackman coined term. But a lot of people who bought this offering in July 2020 and have been sitting with their money in Ackman's hand for a year are not happy because they're basically getting no return on their money. So in that offering, the SPAC sold for $20 units consisting of a common share and 1/9 of a warrant exercisable at $23 after the SPAC's merger. So shares peaked around $33 in February and had consistently traded in the mid to high 20 range until just recently. And PSTH stock has now dropped below the $20 a share original price, and the warrants have gone down more than 65% in morning trading to around $1 because the strike price is $23, the exercisable price, and the stock is now trading below 20, so there is no value there. Now, for this Sparc idea to go forward, it still needs to be approved by the Securities and Exchange Commission, and it requires a rule change at the New York Stock Exchange, which could take months. This is because in the form of the Sparc, there will be a warrant trading without the equivalent stock that the warrant is a warrant of. So how do you have a warrant trading that's not on a stock? That's yet to be seen, and that's what they're trying to iron out and get approval for. So if it is approved, the Pershing Square Sparc will have 200 million Sparc warrants exercisable at $20 at the time of a merger, and 22.22 million additional warrants exercisable at $23, just like the old warrant, within 5 years after the Sparc's merger. So the Sparc's capital structure will be approximately the same as Pershing Square Tontine's, just without the cash for a deal already sitting in a trust. So like they say here, the Sparc is more of a blank IOU than a blank check. Each Sparc warrant represents a right to invest $20 in an eventual deal that the hedge fund manager negotiates without a deadline. And that's different from a SPAC, in which the money is raised upfront in an initial public offering, with backers then going out to secure a merger, usually within the next 2 years. So let's take a look at how this deal currently looks and what the proposed Sparc deal will look like for shareholders that are holding right now. So here are the investors, and this is PSTH stock and PSTH warrants. And so the original IPO investors, they took their $20, gave it to Bill Ackman, and they got 1 share of stock and 1/9 share of warrants. So what Bill Ackman is saying is that under this SPAC, now that they're getting sued by these lawyers, they're going to spend a lot of money fighting this or making them go away or whatever they're going to do. In the meantime, any company that might have been interested in doing a deal with the SPAC is now scared away from this, and so they don't want to touch it because they don't want to get involved in the litigation, and maybe the deal's not going to go through or whatever. So it's one big messed up situation here, the way he says it. So now his proposal of what they want to do is they want to take away your warrant, take away your stock, give you your money back, put it in your pocket, and now you get a Sparc warrant along with your money. So now you have your money and you have this warrant, and you could sit here and wait. And this Sparc will now go look for a deal. Now, if the Sparc finds a deal, then they will say, okay, they're going to tell these people who have the warrants, hey, this is the deal that we have. If you're interested, you have this warrant. It's like a coupon to get into this deal, or an IOU or something like that. And so anybody who holds this warrant, they could say, I like this deal and I will give you my money, or I don't like this deal and I will keep my money. So obviously, if you don't like the deal, you don't have to do anything and you keep your money. If you do like the deal, then you can trade in your warrant and your money for stock in the deal before the deal gets done. So it's kind of simultaneously. You give us the money and the warrant, and we have a deal on the table that all we need is the money, and you guys get the stock, and the deal is done. So that's kind of what he's suggesting in this new structure for the Sparc. And one other thing, for those people that bought just the warrants that are going to expire in 2 years, this new Sparc deal will exchange a 5-year Sparc warrant for your PSTH current warrant right now. So it is giving you more time, because right now these warrants are going to be essentially worthless, since the exercise price is $23 and the stock is trading at 20. So if they redeem this stock at 20, these warrants will be worthless. So they're exchanging them and giving you more time on them with the same $23 exercise price 5 years after a deal is done. So you have 5 years after they make a deal to exercise this warrant at $23. So guys, that's a look at how this new Sparc deal is going to work, how they will exchange your old shares for new shares and warrants and all of that stuff. The big thing is, one, are they going to get approval by the SEC? Two, is the New York Stock Exchange going to change the rules just for him to let warrants trade before the stock actually trades? It's kind of like a chicken and an egg thing. And three, are investors really going to trust Bill Ackman after they tied up their money for a year and they're kind of basically getting right back to where they started from? As the market has gone up a whole lot in the whole year, there's a lot of opportunity cost that people are complaining about, as well as people who lost a lot of money on the PSTH stock itself. So if you are a PSTH holder or warrant holder, do you trust Bill Ackman to help you out and make it right with this Sparc deal? Let me know in the comments below if you would, or if you intend to do this, or if you just want to take your money and go on to some other investment. If you like this video, hit the thumbs up, and I'll see you in the next one. Thanks for watching, guys.